Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, so basically the market is absolutely flat. We are off the highs quite substantially, but we're not in the red anymore. I mean, I think that's a saving grace. Some news from Delhi. We've got a fresh new draft defense procurement policy, and comments are invited. Rituparna is telling us what is different about this than all the previous ones we've seen. Rituparna, morning, over to you. Okay, I think the lines are, we've lost the line actually.
Yeah, but I just want to point out, now it's around a 3% cut which is coming in on BPCL, HPCL. So do watch out for the OMCs, because there's something going on in terms of the weakness that we're seeing. It's down 6% on a week-to-date basis as well. So do watch out for that, and even ICICI Bank and State Bank of India. But anyway, we have a guest joining in now.
We've got Ravi Kataria joining us of Investment Imperative. Ravi, thanks very much. Good morning. Good to have you here. So what we're going to do is talk about three stocks that you like. So the first one is Kochi Shipyard. Why don't you talk about that, why you like it, and the rationale, etc. Yes.
Sure. See, Kochi Shipyard is garnering more than 80% of its revenues from the defense contracts and remaining from the commercial shipbreaking and the repairs. So its current order book is, we are expecting it to bump up with the orders of 5.4 thousand crores of ASWs. And the phase 3 of IAC, the Integrated Aircraft Carriers, we are expecting it to fall into the court of Cochin Shipyard. So that should add another 10,000 odd crores in its order book. So we are having a decent revenue visibility for the company on the defense contract side for the next 3 to 4 years. And the IPO proceeds that the company has received is investing in the International Ship Repair Center. So that business has already jumped to almost like 500 crores odd in the FY18, and we are expecting it to triple by FY20. So the ship repair business is quite augmentative. It's high operating margins. The company has entered into MOUs with the Mumbai, Kolkata and Andaman Nicobar ports, and with the drivers like development of SEZs and so on and so forth. Yeah.
Okay.
We are expecting the company to,
Okay, fair enough. So for Cochin Shipyard, you have a target of 594. Just explain the rationale behind Rushil Decor. Why exactly do you like the stock, and what is your target price, and what is the time frame as well?
Sure. See, Rushil has expanded recently into WPCs. Sheets are being, preferred by all those which are coming up with the smart cities and green cities projects. It's a 100% eco-friendly product, and it has done 5760 MT per annum kind of in capacity at its existing facility in Chikmagalur. So that should add around 60 odd crores in its top line. And the company is also expanding its MDF capacity by almost 3x by FY20. It's estimated to cost the company around 340 crores, which will be funded with a ratio of 2:1 in debt to equity. Now, MDF and WPCs have hardly any penetration in the total consumption of laminates. So the company is expected to gain out of it, and we are expecting its revenue to expand by 50% almost by FY20 due to these additions. And we have kept a price target of 1173 for the stock, considering an EV to EBITDA of the 16x.
Okay.
Last one is Vedanta.
Vedanta is, the global commodity cycle has reversed since the last quarter of 2016 and 17. We are expecting it to last at least 3 to 4 years, given the global economic outlook, and it would be one of the strongest post-2007, recession era. It excludes oil. We are talking about non-ferrous metals, aluminum, zinc, copper, which constitutes more than 3/4 of the total revenues of the Vedanta. The remaining 20% comes from oil and gas and power, which is expected to be subservient and relatively lower on the growth side due to the pricing and the supply pressures. Now the company is going to operate its 6th facility as Jansagar, and that should add to its total supply, and from the demand perspective we are fairly confident. It's having a sizable debt of 29 billion on a consolidated basis, but it's reducing it by 3 to 4 billion depending upon its current cash flows. So we have a price target of 396 on a EV to EBITDA of 12x. Yeah.
Okay. All right, Ravi, we're going to leave it on that note. Thanks very much for joining in and taking us through all of your fundamental picks. So that's the view coming in on some larger as well as mid-cap picks. For the markets, we're down around 0.6% for the mid-cap index. Need to take a break, but more on the markets once we're back.
Okay, the market is absolutely flat. 10,156 is where we find ourselves at. The big talking point, the big story really has been the roadblocks, if I can use that terminology, which the entire insolvency and bankruptcy process has found itself caught up in. I caught up with Harsh Goenka, chairman of RPG Enterprises yesterday, and here is his candid take on the entire matter. He thinks it's not the government, the courts which are to blame, not the law, but it's industrialists themselves who are essentially the speed bumps in the resolution process. Listen it. What about cleanup in the banking system? What's your view? I mean, that's the big talking point nowadays.
It's a very serious issue.
But do you think we're on the right track with the IBC, the NCLT?
To me, the IBC is as big a move as demonetization or GST.
Right.
The unfortunate thing is this whole NCLT business is, though the intentions are good, the processes meant to be are clean. There are so many legal cases going on, one promoter to the other, from somebody is challenging the IRP, somebody is bidding a higher price after the process is over. I think we ourselves are to blame. We always, businessmen tend to blame the system, blame the government. And as far as this time it is concerned, I think the government is on the right path. We are the ones at fault. And the erstwhile promoters, I think they are extremely scared because what is left behind is a fair amount of muck. And if any audit happens, which may happen once a new promoter takes over, there will be an entire trail that they would have left behind. And therefore, I can see existing promoters trying to delay tactics or get out of the NCLT system so that...
but do you think outside interventions should be allowed? I mean, in what we've seen with the cement asset, for example, do you think that kind of thing should be allowed, or the government, because it's in the court now, I mean, as you say?
Yeah, but there is a track which has been laid.
Right.
And why are people challenging the track?
Right.
If you had to bid for something, you bid at that point of time. You cannot go across the system and try to derail the system.
Correct.
And that seems to be happening. So many of these cases that are happening, legal suits, which will go on and on. And I was very happy to see that within 9 months, a resolution will have to be found in most of the NCLT cases, because we're talking about the first 10, then there is another 40 that needs to come into play.
Correct.
And one needs a solution.
Right.
But one has seen, for example, in the road sector, so when this present government came, there were so many road projects which were halfway.
And there's been a fair bit of momentum there in terms of getting them all together.
Absolutely. In fact, to the extent that we started thinking, is it an interesting sector to get into?
Okay. I mean, which is essentially the EPC play that
Absolutely.
you're talking about. Fair enough. No, just to come back to that point, but now that these cases are in the court, what's the way out really? I mean, the court has to put its foot down and say...
I think so.
Because the courts have to interpret the law.
Absolutely. I don't think it is the government anymore, because most of the people, whether it is the promoters, whether it is the bidders or the counter bidders, they've all seemed to have gone to the court or the press. And I think there's more mess happening than anything else. And I think...
And how these cases will be decided, and if they say, well, this is the process and let's stick to this, no other interventions will be allowed. I mean, that also lays down a precedent, right?
And that's exactly, I think, what should happen is that you have an IRP, you have an NCLT, why are people going to the courts? Because unless there is something, a serious grievance, you have bid for it, the highest bidder needs to win.
But do you think this will finally see through all these,
The government means well, and I think it's determined to find a solution. And I'm very hopeful.
the government has laid down the law, but now the implementation has to happen. So are you bullish about the process? Or
I'm very bullish, because I can see a sense of purpose as far as the government is concerned, and the courts seem to be in a hurry, except that we ourselves are creating problems.
Well, it seems as though there's some traction coming into a couple of these select auto names. So Tata Motors, after the steep and stark underperformance that we've seen, that stock is down 21% year to date. It's seeing some amount of a comeback, so that stock is up around 1.2%. Sun Pharma has given up all of its gains from the day's high. It's up only around 1%, not able to sustain despite the positive news which came in this morning. And we're seeing select private banks gain, so it's really a mixed picture for the banking space. IndusInd, HDFC Bank in the green, but we have stocks such as State Bank of India, which is in the red, down 2%. ICICI Bank down 1.7% as well. But with that, it's also a wrap on trading hours. Stay tuned. Halftime report just after a short break.